Good morning. Welcome to the Techno Fundamental Report for October the 10th. History doesn't repeat itself, but it often rhymes. Mark Twain. You know, when we look at these indicators, we have to realize that we're basing it on a statistical studies of the past and saying, okay, this is history. Will it repeat? Well, sometimes things are incalculatable. And I would really tell you that when you're looking at an investment, you want something that really is not real calculatable because you need to have a speculation involved. So if you think about incalculatable situations, the genius of Sam Walton back in the 70s, Walmart, trying to understand the invention of the personal computer in 1982, Bill Gates, understanding Amazon, understanding all these companies that you just could not calculate what they were capable of doing. And so it really gave you an opportunity to speculate on that situation. So we look at these indicators and we back test everything that we look at, and we'll add indicators over time. In fact, I'm going to talk to you about one that I'm getting ready to add. But there's statistical data that gives us a group of indicators that we would say are eras that we're using in our era patch. Harnessing a power trend. Okay, this is an indicator developed by Investment Business Daily, and Mike Webster developed this indicator. And basically, the rules are this: it says, "What is a power trend?" Because we are in a power trend right now, and this is rare. It doesn't come along. It hadn't come along in quite a while, in fact. And what we look for is certain indications of moving around moving averages. So the low of the major index has to be above the 21-day exponential moving average for at least 10 days. The 21-day exponential moving average is above the 50-day simple moving average for at least 5 days. The 50-day line is in an uptrend and the market closes for the day. So let's look real quickly at the S&P. You can see here we have been above, this is the 21-day exponential moving average. We've been above it for 10 days. The moving average itself has been above the 50-day moving average for at least 5 days. The market is hitting a new high, and the 50-day moving average is in an uptrend. So the basic concept here is that this is a time to be buying. You're in a very strong uptrend. Now, we also want to look for stocks that we think are under the radar. Gerald Loeb in his book says, obviously our ideas will sound wrong to most people. Any investment policy followed by all naturally defeats itself. Thus, the first step for the individual really trying to secure or preserve capital is to detach himself from the crowd. So basically, you want to look for stocks that are under the radar. The ones that are already, everything is factored in, the horse is out the barn, all the facts are baked in the cake. This is what you need to look for. Now, on a macroeconomic number, we got our jobs report last week that was very positive. You can see here that we're seeing improvement in unemployment. It went from 4.2 down to 4.1. So the economy is appearing to be quite strong. Now, interest rates continue to stay in a downtrend. We have gotten a rally in the 10-year Treasury ever since that jobs report, but we continue to feel strongly that we're below zero on the power index. Now, if we get back above here, we'll have to reevaluate. The main trend, the primary trend for the indexes, the S&P 500 continues to be up, and the NASDAQ continues to be up. Very healthy pattern. Now, this indicator or this index, I think is the most important index you could be following right now. Let's go back in time here a little bit. 2020, we saw a major rally in the market, primarily led by stocks like Tesla. Then it all peaked out, and we came down, and all of a sudden it became apparent that inflation was becoming a problem. Fed started raising interest rates, and we come down dramatically. If you remember in this period here, everything came down. Bonds came down, gold came down, stocks came down, real estate was in trouble. So this was a major bear market. Things like NVIDIA dropped like 70%, that type of thing. So we came down, made a low, and so we've been just basically going back and forth here. But you know, one thing about these indicators and looking at these graphs is you want to look for subtleties. And so it's very subtle to me that this particular index is starting to break out of a trading range for the first time in 2 years. This is very positive. So just looking at the major indexes again, here's the NASDAQ. You can see here that, you know, we're in a strong uptrend here. We're making progress. It's above the moving averages, the 25-day and the 50-day. So NASDAQ continues to looks positive. The aggression index is starting to stabilize. We've gotten back above the moving averages. Hopefully we stabilize in here and then continue to rally. You know, it was a big concern back here what was going on, but it looks like we're starting to stabilize, which is again a positive. So looking at a couple of stocks here, again last week we talked about how you want to have a constructive base, then a breakout above the base. Here's another base, a breakout, and now it's formed another base and is breaking out again. Now what we're seeing here is a theme of companies that manufacture natural gas turbines. You know, we all know about artificial intelligence, again something that is impossible to calculate. But there's a big move towards natural gas turbines. So we're seeing companies that are involved in that business. Now here's another one, Howmet Aerospace. Again, you see a very constructive base, a breakout, and it's trending. It's in a nice uptrend. They too are involved in turbines. So if you have any questions, please let me know. Thank you very much.